Hey everybody, what's going on? Welcome to day 11 of my Forex journey. And I know it's about 7 o'clock right now, so there's about 2 hours that we did not necessarily record. But in terms of that, there really hasn't been an opportunity up until now to take a trade. And that's so important to start off today's call with. You know, as far as when trades come in, when we're going to be able to take them, there might be times where, especially as you get yourself accustomed to your trading journey, where you're going to be able to see trades like boom, 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 like, taking all the trades that you can. And sometimes, there is going to need to be that patience that you need to muster in order to wait for your opportunity. And so we definitely have that right now. We have to, of course, let this candle close in the next 30 seconds because we certainly don't want to take a trade when that arrow disappears and then our trend is not confirmed. But as far as what we're looking at, we definitely have a downturn in the market right here. I can go ahead and take this trend line right here and just kind of glance over, see that we definitely have a downtrend going on right now. We definitely have some lower highs and lower lows being created in the market. Let me just go ahead and really just kind of show that right there, right before we need to go ahead and get ourselves ready for the trade. So here's our lower high right now being created in the market. I'm about to get ready to get into this trade. Now, what I'll do is I'll close a buy trade in profit. That is essentially our way of getting ourselves into, that is our way of getting ourselves into a sell trade when it comes to our pair, which is gold. And so let's go ahead and let's get that done. So we're going to go ahead and get ourselves into this trade, and we're going to go ahead and let this trade play out. We don't deviate away from the plan that we have already set for ourselves. We know when we're getting in, we know when we're getting out, and there's nothing we need to change based on that, at least for right now. So I definitely want to go ahead and just say that I hope each and every one of you are having an absolutely amazing day today, wherever you are tuning in from in your own neck of the woods, per se. I'm glad to be on day 11 with you, and this journey isn't going anywhere. I don't intend to go anywhere. So we're going to go ahead and let things go. Oh, I do need to go ahead and just take down our equity for the day so we can make sure we are keeping track of that. And that is at $96 right now. I know it has changed in there in some way, shape, or form, but let's go ahead and let's keep this simple and just tack on the nearest dollar, especially because as we move forward, the cents aren't necessarily going to matter as we go ahead and as we compound our account. So what I want to go ahead and just show everybody or talk about today, we've uh, talked a lot on Monday about certain things that were going on in the market. Now, I want to go ahead and bring some concepts that are from the books I've been reading. Of course, we talked about this some of the days on this Forex trading journey. I've talked religiously about Unshakable by Tony Robbins. If you've not gotten that book, I encourage you, I plead with you to go ahead and get this book. This is absolutely one of the biggest books I read when I first started trading, and it really opened up the door as far as how to teach. It really started to allow me to adopt to that student mindset, while I was learning the Forex trading game. I go back to July of 2021 when I picked up this book. And I know that on that part of my journey, which would have been, that would have been right around the 8 month point for my journey at that point. And I wasn't adapting to the student mindset at that time. I was learning, bit by bit about the Forex market, but I really didn't open myself to do any additional learning other than what let me take that. We rewind that back. I was only learning based on the courses that were made available. I didn't necessarily apply myself to go deeper into my learning journey. So Tony Robbins' Unshakable is really that first book that allowed me to open myself up to that stream of learning a little bit more. And so we're going to go ahead and talk about this book a little bit more. Again, I would say that I'm giving you the cliff notes of this book, so you really are going to do yourself justice if you pick up this book, if you pick up the book and learn on your own. So without being around the bush, let's go ahead and let's talk about this a little bit more. I'm just going to take a look at silver. Okay, nothing right there. We're still on gold, and we're still in that sell trade. And again, the way that we did that sell trade, just to recap, is we closed one of our buy trades in profit from our account that was 100% hedged, and we are going to go ahead and allow that trade to play. So let's talk about the book. So the name of the game, right? What is the name of this particular game? We've already know what this game is. It's called Forex trading, but how can we dive into that topic a little bit more? Well, it's it's simple. The name of the game is we are moving the money from all these different institutions. We're moving the money from all of these different banks, these different governments, these different central banks. We're also moving. Oh, there we go. So, oh my Lord, got so many dings right there. So, and now we can see that that has turned into a sell. So we are moving forward in the right direction with the trade that we are currently in right now. As you can see, that down arrow turned into a sell. So that's absolutely perfect. Of course, we need to go ahead and we need to let this trade play out. So we are going to go ahead and we will do just that. But what was I talking about? Yes, the name of the game. So what we're doing is we're moving the money from all these different governments, these central banks, these banks. Again, now a bigger contextual picture of all that is these governments keep printing money. You have to understand that back in, well before my time, money has only been increasing in circulation. Now, we certainly don't want to get to a point where it's, hyperinflation, like what's going on with, just a few examples, Zimbabwe, the Weimar Republic, right after World War I. We certainly don't want to allow ourselves to get to that point where we're just keeping printing money, and then, our whole the whole global economy goes to shit. I'll let you figure out the spelling of that word. But what we're trying to do, or what the plan is we're taking all this money, and of course from that we're also going to the hedge funds, we're going to these institutional traders. Now again, granted, these are very, very, very big players with lots and lots and lots of money. And you have to understand, going back to agenda, that everyone is trying to get their piece of the pie, and everyone is, and I don't want to say fighting, I don't know if that's the right word, but they're certainly competing with each other to make the best profits possible. And so us as real-tail traders is we need to understand that that is the aim. Not only that, but these agencies are also, now I pointed out that, the markets are now trying to get me. No, it's not doing that necessarily. However, everyone is competing with each other in order to get their piece of the pie. So the narrative shouldn't be, oh, the market is just trying to grab my money. No, the narrative is more so, if I'm one of these particular institutions, one of these particular traders, I'm just trying to grab my own slice for myself, and quote unquote be damned whoever tries to stop me from my slice of the pie. And it's a very weird perspective, I would say. It's a kind of a behind the scenes reality that we live in. But again, I don't want us to all, think of the whole big picture like that necessarily. No, we just want to focus on what we need to do, which is to just follow all these people that are trying to fight with each other. Like they're looking at us like, we're playing, or we're starting small in this market, so they don't necessarily care about us smaller people. So while we are in this state, it's also a blessing if you think about it, because we're not in the mix of this game. We're doing is just trying to follow along and collect the scraps, if you will, that we're able to get from the market and be able to move forward. So what most people really want, regardless of how much money we have today, is freedom. Freedom to do more of what we want, whenever we want, and with whomever we want. And I mean, I think that's very, very valuable in terms of understanding the bigger picture. We're all wanting to gather this particular freedom from Forex trading, right? We're trying to gather our own slice of the pie so that we can use that for our own financial freedom, time freedom, stress freedom. You can think of any particular freedom that comes to mind, and the Forex market, directly or indirectly, is going to go ahead and allow us to accomplish that. All right, everybody. So we are back. I just wanted to go ahead and just give everybody an update on the trade that we are in. We're currently still in that sell trade that I took with this arrow right here. That is still a thing. As we can see, we were going all the way down, so our trade was at a success point. Then we got ourselves into a lower high, so price retraced on us, and then now currently we are going down all the way here. And again, for me, because we closed out a buy trade, I am more than willing. One of my a situation in this aspect is because I'm willing to stay in this trade for a little bit longer, because our next sell trade won't be as far as reaching that particular case, isn't coming to us within the immediate, what do I like to call it, the immediate position. So in this case, I don't mind letting this particular trade run to see how far we can go down. Now, of course, if I do get something as far as potentially I need to switch up tactics, that's what the trend will tell me what to do. The trend will tell me that I need to switch tactics. Then we'll definitely adjust our position. But at least for right now, we're rolling in on this particular trade. We're riding the wave, so to speak, and we will go ahead and do just that. Now, what I also want to go ahead and talk about, so when we last talked, we talked about freedom, right? The purpose of trading in the Forex market, what kind of freedom that would give us, whether, again, that's money freedom, time freedom, stress freedom, all that stuff. And it's certainly important to know specifically what that freedom means to you. Because again, we talked about at some point within the last week commitment to this game. What's going to have you stay committed? What's going to have you stay focused as you go through the good times of Forex trading and as you go through the bad times of Forex trading? Now, as we've gone through these past couple of days, we've noticed that there was a little bit of a lull, and now we're coming back. So what made me come back and say, okay, we took a loss on day 9, we took a loss on day 10, now we're in the right direction with day 11. How does the mind say, okay, we're going to be able to process all that and we're still going to move forward in the right direction? And again, that is all coming down to the why and just staying committed and focused in the long term. And I tell people, especially if you've seen my trailer already, you could check out the trailer on the YouTube channel, but I tell people to go from day 1. Don't start at the most recent video, right? Now, I will give those out to people I know that have been watching the videos, starting from day 1, but I really do hope for those who are new to the game, who are just kind of watching day 11 haphazardly, if you really want to know the longevity and the staying power of the Forex game, you really want to go ahead and make sure that you're looking at day one, start at day one, then move up the days from there to see exactly the process, the discipline, the patience, and the staying power that you can have when doing Forex trading, right? Now, I also want to go ahead and talk about some things that we have done as far as the trade that we took to get to this point, right? Because I didn't necessarily place a sell trade. I didn't place an additional sell trade, but instead I closed at a buy trade that was in profit. Now, it's important that any of these lingering trades that are in profit, that we can close in our hedging system so that we essentially take a trade in the opposite direction. That's going to be important for us to understand. And we're going to talk a lot more about this as we move forward throughout the coming days. I know there's a lot of information that I'm talking about right now, and a lot of information I talked about over these past couple of days that it's like a fire hydrant. I'm going boom, 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 boom. Get all the information. It's like, that's a lot, Jordan. That's a lot. So of course, we need to break down these particular concepts. And so we're going to go ahead and do that. But I do want to leave you with this, right? I want to leave you with this particular important concept. The excessive fees can destroy what we have created. Now, by minimizing these fees, we're going to save time building this particular account. And this one move will dramatically accelerate our journey to financial freedom. And we'll also learn to slash out the things that we don't need. Again, going back to those fees and costs that we don't need, that we'll pay on what we're doing here if we don't learn how to do this right. And we are going to go ahead and we're going to break that down specifically. All right, everybody. So we are back. So as we can see, we took a few more sell trades on our side. We're still technically in a downtrend at the moment. We do see that price did retrace on us just a little bit. So we took a couple of sell trades, and I'm going to show you specifically how come I did that. So the first photo I've got right here, we could see that this was the 8:55 a.m. candle that I took my first trade on. And so what I did for that was I had placed I closed an open buy position that was in profit to indicate the second of my currently open sell trades that I was a part of. So you can see right here, there was a little bit of profit that we were able to take on this buy trade specifically. I'm just looking at this candle right here to make sure that I am indeed being focused on it. So I closed this particular trade right over here. And then afterwards, we've got a couple more open sell trades. So at this point, this would be at the 9 a.m. candle. We could see that price did move up just a little bit. The arrow then moved from this candle right here. Hold on, give me 1 second, everybody. Again, just making sure that I'm focused on my trades, that's not going anywhere. So we had the second of our sell trades. This candle right up here was the second of them. And then what happened is then this 9 a.m. candle right here was then used. So we then took another trade after this candle closed. We opened up a sell trade right about over here. Let me make sure I got that correct. So right about over here. And then after that, I'm going to clear some of all this up. Then we have one more sell trade that we took, and that was during the 9:10 a.m. candle my time. And price retraced up to about over here. And then just taking a look, that's where we're currently at right now. As we can see, this is our latest sell position that we're in. So right about over here. So right now we're in about 4 open sell trades at the moment. Again, we still believe in the downtrend. We can still see that we are most definitely in the downtrend still. And until I am proven otherwise, we're going to go ahead and hold on to these particular trades over here. So we're going to let that play out. We've got about, well, I would say about 40 minutes until the market itself closes, or I'm sorry, not the market itself closes, but we're going to go ahead and close ourselves out for the day. So we've got about 42 minutes before that all takes place. So we were talking about, making sure that we're on unnecessary trades right here. And so going back to those first 2 open trades that I took, I went ahead, and because I knew that I had 2 open buy trades in profit, I went ahead and I closed those out first. That allowed me to unnecessarily open up 2 sell trades. And so we closed out those 2 trades, got our profit in, which added to our balance. But again, what we're looking for is not necessarily the balance to change, but more so our equity to change. And so we took care of those 2 trades right there. And then because we had the arrow shift to about 2 more additional candles, at that point, we went ahead and opened up 2 additional sell trades. And so that is our plan for right now. Just we're letting these trades play out, allowing us to see what the market is indeed going to do. And then we're going to go ahead and just stick with the plan. Our plan, we've been doing this consistently for, this would be about, let me make sure I've got this correct. This would be about the 11th day that we've been following the plan. And I, again, do not see any reason to deviate from said plan. Now, the reason that we've been closing all these particular open trades that we're in, more so than placing new ones at the start, is because, again, I want to everyone to pay attention to the swap fee. Now, we'll go over this more so as we move on throughout the journey, but it is important to realize that with the swap fees, excuse me, that with the swap fees, these swap fees occur every day that we have these trades open past the 5 p.m. Eastern Standard Time hour, which would be the 4 p.m. Central Time, the 3 p.m. Mountain, and the 2 p.m. Pacific. And so with each day incurs a fee that is deduced from our equity. And so to avoid those as best as we can, we definitely want to make sure that we are closing these trades when we need to. So going back to the 2 open buy trades, we did that so that we could avoid placing a additional swap fee on them. And it also makes sure that we're not placing any additional trades, which could, again, eat up our equity as we move forward. We want to make sure we avoid any unnecessary eating of our equity as possible. And so we took the 2 buy trades off the table, closed them out in profit, and now we're looking to do that. We still got those two sell trades that we made by closing up the 2 buy trades that were in profit, and we also have 2 additional sell trades, again, because the arrow was moving and we were cost averaging at that particular point. Now, again, we've certainly talked about government banks, central banks, all these big players out in the market. And when we really think about it, the purpose, everyone is under, and I go back to the agenda right here, everyone is under intense pressure to grow profits, and they're rewarded for doing so. So you've got hedge funds that are rewarded for growing a customer's profits. You've got institutional traders that are rewarded for growing an investor's profits. You even got banks that are rewarded for doing the same thing. And the governments and central banks are rewarded by making sure that their economies are left in balance as well. So as we move forward, we're going to start to see, again, it's not necessarily that everyone is competing to get everyone to get after each other. It's not like, it's not like everyone is intentionally trying to destroy each other. It's more so everyone has got their own agendas in play. Everyone's got their own interest in play, which is to grow their accounts, grow their shareholders' accounts, grow their people's economy, if we're talking government perspective. And so all we're doing as the retail trader who doesn't have a big balance like some of these other entities have, we are following along with what they're wanting to do and ultimately riding the wave towards our prosperity. And so it's turning out, or as far as all these people making predictions. So, we talk about the news like CNBC or a Fox Business or a Bloomberg. You can give me any financial news agency in the world, and I'm going to lump them all in under the same coin. It turns out that a lot of these professionals aren't really any better at predicting the future than the rest of us. And think about it. We're not necessarily predicting the future when it comes to predicting the market per se. All we're really doing is just following along with the wave, if so to speak. We're following along with, hey, we're still in a very much long-term downtrend. We've been seeing that throughout the market as the day has passed. So there's not really a reason to deviate from that said plan. In retrospect, humans are generally pretty lousy at making predictions. So we're not really making predictions. Again, we're following along with what we are doing based on the trend. The trend is probably the most, if you had to mentally tattoo something as far as what is the biggest emphasis for placing the trades the way that we are, it's trend. It's the market structure, and it's just going along with what is going on right now until we're proven otherwise. And so when active fund managers, when banks, when institutional traders, retail traders, they trade in and out, stocks is talked about a whole lot. And as you could see, that down arrow just did turn into a sell text, but it now just went back to the arrow. So that really does tell us that we're on the right boat right here. And so when all these players, they trade in and out of Forex, they trade in and out of stocks, trade in and out of crypto, bonds, give me any financial instrument out in the market, and I would throw it into that particular category. Now, when they do this, there are plenty of opportunities to make mistakes, right? And so that goes back to that whole circle of anxiety thing that we had discussed right around day 7. 95% of these trades, they're in drawdown. Everyone knows that. So that's not part of the circle of anxiety that I talk about. We all go through the 1-minute play-by-play analysis. We close the trades out that give us a minute amount of profit. Now, I can understand more so some of that circle of anxiety coming on a lot more of the bigger institutions that are out there, because think about it like this. I'm trading with my own money. I'm trading with my own style. I'm worried really about just my account balance. I'm not necessarily worried about guarding or stewarding thousands and thousands and thousands of accounts, nor do I want that responsibility, nor do I want that power put on me, because that is a lot of pressure. We go back to what did I say before? A lot of what's going on out in the market, there are a lot of traders, a lot of big traders, institutional traders, hedge funds, the banks. There's intense pressure to grow profits, because what we're doing is there's a lot more people that are involved with these hedge funds, institutional traders, and banks, central banks, governments. There's a lot of people that they have to think about. Us as retail traders have the unique perspective, the unique advantage of understanding we just got to worry about ourselves. We just got to worry about ourselves. We just got to worry about growing our own accounts. We just got to worry about doing what we solo need to do to move in this market. We don't have the weight of the world on our shoulders. And so when you give that particular ability, when you think about the stakes like that, we can think of investing in the Forex market almost like poker in a sense. Now, let me dial it back. Forex trading, stock market investing, that's not gambling. What we're doing is we're making educated decisions. We're making the best guess possible on these trades because of what we see in the market, based on the data and based on what we know about trading. That gambling is different in the sense of it's all luck. There's might be a little bit of skill when it comes to poker. And I should know I played poker a little bit. I'm not fantastic at poker, mind you. Like I'm not telling people, hey, I want to go to the World Series of poker. Please, let's not get ahead of ourselves. But poker, it's really all about luck, and it's all about there is strategy involved as far as poker to essentially make sure that your endurance stays in the market. But poker and all these other games are just strictly gambling. It's all luck. You can bet it all and lose, bet it all and win. Like there is no skill when it comes to that. It's just the luck of the draw. Now, with that being said, like poker, investing is a zero-sum game. There are only so many chips on the table. When two people trade a stock, one must win and one must lose. It's just like gold trading, or really any trading that we do. One player must win, one player must lose. It's a zero-sum game. If the stock goes up after you buy it, you win. But you've got to win by a big enough margin to cover these transaction costs. And let's go back to Forex trading now. There are costs when doing this. We talked about commissions and swap fees. And so our objective is to ensure that we are doing everything in our power to understand that we've got to win enough. We got to stay in the game long enough to make sure all these little costs are covered and that our account continues to produce the equity or the fuel that we need to have our staying power in the markets. And so when our profits go up or when we get into these trades, we every day have to go and pay these particular swap fees to stay with these trades. And so for investors in this particular scenario, if we don't pay attention to that and we let all these open trades run amok without a enter plan or an exit plan, all these little costs will eventually add up to a point where our whole entire account is eaten. And so that's how come we do the due diligence of, okay, we got an opportunity. Let's either open a trade if there's no other, if that's our last measure with this hedging system, or, and this is the more preferable option, going back to the first two trades, if we have open trades, open buy trades, when we know we need to sell, we have open buy trades that we are in profit, I'd rather take care of those first and then open up some additional sell trades if the situation sees fit. Because again, if we have a million different open trades where we're just buying and selling, buying and selling, buying and selling, then what we're doing is we're just allowing then the swap fees to come in. The brokers take those swap fees, they eat them up, and then we're dead. That's it. And so our profits can be slashed, or our equity can be slashed if we don't allow that to come under control. And again, if we're thinking about this, okay, as just the retail trader, right? Where we're really the only ones that have to, that are concerned about these costs. And we're just, again, we just care about our account, but we're not moving these markets. Think about the bigger players that are moving these markets. They have to think about the same thing, but on a global level, on a more bigger umbrella, bigger perspective, because they're not just concerned about their own trading. They're concerned about, well, what are my shareholders going to do? And the reason I say this is because even though we have such a small amount of capital, we also have the smallest amount of burden on ourselves to rack up insane performances. Because all we're doing is we're just caring about our own accounts. We care about just how we trade. I believe that's most. Now, if you're trading for a few people, that might be a different story, and you will have more pressure than I do. I'm not going to argue that particular case, that you have more pressure than I do. But if you're just trading on your own and you're trading on your own account, there's a little bit of we talk about freedom, that's a little bit of a freedom to know that you can play with your own account. And if you play with your own account, it's just you. It's just you that you need to worry about, not anybody else. And that's a bit of a relief compared to what some of these other organizations, if that's the right way of calling it, or the other players, that's, we don't have to necessarily worry about that necessarily. So again, as a retail trader, the main thing that I want to go ahead and make sure we all put into perspective is we have our own control of our accounts, and we're only worried about what we're doing. We're not worried about, other people that are anchored on our shoulders in a sense, because we're not trading multiple accounts like some of the other bigger players in perspective. Now, another thing that I will talk about, and I think this is a very, very important concept as we move forward, right? Because while we've been so far doing well, relatively, and making sure that our equity is protected, we're taking the trades that we need to, we're basing our decisions based on our trading plan. There's another concept that we want to make sure that we're taking into account, and that's this. We need to base every investment decision on a deep understanding of probabilities, not emotion or desire or luck, right? Now, what does that mean? Every trade that we've done so far, I'm not doing it because, hey, the sky is blue, or hey, I just really like that trade, without understanding what the probability is. All these sell trades that we're doing, I'm basing this on a deep understanding that right now gold has been going down, that we've been in a down market with gold right now. And there hasn't been anything that has told me that it's no longer a sell market. We still have everything going down in terms of the market itself. So all we've been doing is sitting, at least so far, on 4 open sell trades. And we didn't close when our trade turned around on us. We didn't emotionally panic and close out these trades. We still held on to them because of our plan. We're not done trading until the next 22 minutes from now. And frankly, I believe that I'll close even in the next 16 minutes because I frankly don't like to have any open trades during that last candle if I can help it. Now, think about it like this. We have a probability that the market is going down. We have a probability the market will continue to go down because we have not seen anything that would change it. And so, based on those probabilities alone, we have based our decisions because of what we know so far, because of the data that we gathered. We didn't emotionally feel like, oh, today's a sell market, so let's do only sells. We didn't desire to say, oh, I really desire to make this a sell market, so we better just have sells and the market better just cope with my desires. And even luck. This wasn't luck that all this happened. If that was the case, then we'd be the ones in total control of the $6.6 trillion a day market, which we've established over a couple of times already. That's not the case. There are indeed bigger people at play. And so if we can understand that we base every decision on that, then we can make sure that we move forward in the right direction. And we may not earn as much as some of these institutional traders or hedge funders or government central banks and banks, but we also don't run the risk of losing as much as some of these players. We might have taken some small losses on our journey so far, but I guarantee you that there are funds and people out there that have much more capital than I do that have taken way worse losses in the market so far. And that's just a perspective I understand. So to be in this position, I'm very grateful for it. Because at the end of the day, we're not here or we're not going to beat the market. Competing in the markets is more difficult than winning in the Olympics. There are more people who are trying to do it and much bigger rewards if you succeed. Like competing in the Olympics, only an infinitesimal percentage, very, very, very small percentage succeed. But unlike winning in the Olympics, most people think they can do it. Before you try to beat the market, recognize that your likelihood of being successful is extremely small, and ask yourself if you spent the time to train and prepare to be one of the few who actually wins, right? When we've been doing this journey, day one is when we started. That was September 6th. September 6th wasn't my first day doing this. I've had before that point, a year and 10 months of experience learning, and I still learn from my Forex mentors. And so that knowledge has allowed me to develop my own strategy. And I understand that there are so many people in this market that if I try to think of the concept of beating everybody instead of just joining the winners, then my account would have been killed already. I've seen it in the days I've blown my account. I've seen it in the days where I've lost money. It's because I myself was trying to beat this market instead of just joining the winners. And so we must understand that Forex trading is the Olympics of finance right here. I'll write that down again. I'm going to write that, right? Forex trading is the Olympics of the financial market. There's no one bigger. Stock trading, crypto trading, pale in real estate trading, pale in comparison to the $6.6 trillion a day giant. And while stock markets are limited to regional perspectives like the US market, of course, you could trade in other stock markets, mind you, right? But as far as the accessibility, it's all over the world. Everyone is competing to get their slice of the pie. And all we're doing is making sure that we stay in the same direction as the winners. We're not doing anything different, nor are we required to do anything different as well. It's like running I compare it to this perspective. We're not running a sprint here. We're running a marathon. And a marathon, we're not trying to have the big one. We're not trying to run and beat everybody else during the first parts of a marathon, because then all of our energy goes away and everyone flat out beats us and we lose. No, all we're doing is we're just staying in the game. We're making the moves that we need to bit by bit, day by day, step by step, brick by brick. And we're continuing on this particular journey together. And so there's no need, when we think about it, there's no need to do anything that would affect that particular line of thinking. Again, if we can understand that we're in the Olympics of the financial market world and we're doing the things that we need to do to stay afloat, then in the long term, even though there might be some small setbacks along the way, because we're not going to win 100% of the time, and we demonstrated already that we're not going to win 100% of the time, then we're going to do just fine. Just think about it like this, and I truly mean, I want to also put this perspective out. If we're freaking out right now because we're trading on a 0.01 lot size, and we built the balance, built the equity to a certain point, and it comes down, and we're already panicked, and we don't feel that we don't have the fortitude to keep going, then what's it going to feel like once we get to 0.02? The stakes are doubled there. 0.03, stakes a little bit higher. 0.04, stakes a little bit higher. So we have to understand that this is all just conditioning, right? This first 11 days is conditioning for the road ahead. The road is going to get a little bit more steep as we move forward, but that's also what makes it fun, to know that we don't have to climb the mountain the whole way right now, that we could just take this day by day, trade by trade, and we can move forward in the right direction. We can move forward in the right direction. Now, I had talked about before, one of the earlier days of last trading week, I was talking about the core four, and we had talked about one of those principles being slay the bear, right? Excuse me. And we're going to go ahead and talk more in depth about the principles as we move forward throughout the week. But before we do that, I want to come back to some of the key principles that are helping us guide every decision that we make, right? So what guided our first sell trade? What guided our second sell trade? What guided our third trade? What guided our fourth trade today? And what has guided our trades throughout this journey that we've been having together? Now, as far as every successful person out there, and okay, we've got about 5 minutes before I decide to close any trade I see fit, by the way, 5 minutes. So what I want to talk about is these successful people. You know, they could be Forex traders just like us. They could be musicians, they could be doctors, they could be life coaches, they could be coaches, they could be video gamers, they could be YouTubers. I've listed a bunch of different professions, but all the most successful people in any of these particular fields have these three key pieces that I want everyone to write down. So what are the qualities that the most successful people in any field, what do they have? So one, they have a different set of beliefs. Two, they have a different strategy. And number three, they do things differently than everyone else. Now, I don't know if we can get to every particular bullet point that I've discussed. In fact, hold on. I know that this is a little, so I'll give everyone a pause to write this down. 1, 2, 3, 4, 5. Okay. So let's talk about these qualities in a little bit more detail. A different set of beliefs. So think about it, right? As far as the different set of beliefs go, we understand that a lot of the time, in order to make money in the financial market, you have to place a lot of capital out in the market, right? So that goes for the stock market. You have to place a lot of capital in there in order to gain a substantial ROI in order to retire and be free based on that. Now, my belief, as we have shown, is a little bit different. I instead want to show that this is all possible, that what we're doing is all possible to grow and compound a large account just with $100. That's my belief. And the how in that part is not relevant at this particular moment. However, what is important is the what and why for doing so. The what and why for me is understanding that not a lot of people have the ability to go ahead and place a lot of funds in the market right now. $100 might be all that you have, maybe even a little bit below that. Again, I'm not judging. No, I certainly understand that perspective. And so my goal, my job is to show that this is all possible to do it on a small account, even if it's not as we would like to think about it quick. Even if there is a process and plan that we have to follow day by day, step by step, I would like to ensure, make everybody aware that that is indeed possible. Now, they also have a different strategy, the most successful people in any field. Now, my strategy, I know, is completely different from some of these other traders that are out there. They're probably looking at my strategy and thinking that I'm absolutely nuts for doing this. And the crazy thing about it is the most successful people in the world, at least the ones that I know of, I know that what they do is considered insane. Like, they're probably not, like, they were at one point thought, oh my God, this guy is crazy. So let's do this. I definitely first want to go ahead and close some of these trades right here so that, we can make sure that we're not in drawdown. Okay, there we go. So we've ended the day today. So that's our trading day. Now we're going to go ahead and call this day. So let's go look at our equity. So we started with about 96 and we ended at 96. So we didn't win money, we didn't lose money. Although we know that later, the swap fees are going to come in. And so there might be a little bit of a loss that we need to go ahead and consider. But we also want to go ahead and understand that we're still in the game right now. And again, there could have been a point that I could have closed these trades out. And whether I'm right or wrong about that, only time will tell. But I understand that I still have faith in the plan to keep things going. And so my beliefs are different from everybody else. My strategy is different from everybody else. I believe that some people do hedge trading. I definitely don't believe I'm the first one to think about this particular concept, but I know I do it a little bit differently than everybody else. And I also do, and the other successful quality is that we do things differently than everybody else. And if we're not willing to try out all these different things that's different from the mold, and we either stumble a bit or fall flat on our face, if we're not willing to do that and at least attempt, then we're doing ourselves a disservice by not taking that uncomfortable action. Right? Me showing off how I'm trading, me showing the ups, the downs, what's going on, this is certainly uncomfortable for me, right? And of course, there are different things that are running in my head, but I'm allowing myself to put myself in the position of, I believe in what I'm doing. I believe the strategy is going to work. And every day that we do this, that little bit of uncomfortability that I have, that emotion, that drains away each and every day because, I think about it like, okay, I'm still here. Now, we may not have had the success that I want today. We may not have had the things that I wanted to happen in the market. However, I am more empowered with the fact that we're here still, that we still have the ability to keep going, that we have another day tomorrow. Day 12 is tomorrow, and we'll be able to go ahead and move forward. So with that being said, this is going to be day 11 of the trading journey that we're on. Once again, we did not win any money. We did not lose any money, but we were able to go ahead and stay where we're at, and we fight another day. Everyone have a beautiful rest of your day today. We'll see you tomorrow, and happy trading, everybody.